Welcome to the October housing market update from CoreLogic RP Data. Capital city dwelling values increased by a healthy 0.9% over the first month of spring, taking the quarterly rate of growth to 4% and the annual rate of growth to 11%. The strong rate of growth was mostly related to a 2.4% surge in Melbourne dwelling values over the month, while Sydney recorded flat conditions and dwelling values fell across Adelaide, Darwin and Hobart. The September quarter saw 4 of Australia's 8 capital cities record a rise in dwelling values, while the other half saw a fall. Sydney and Melbourne have swapped places as the best performing capital cities over the September quarter, with Melbourne values up by 7.4% compared with a 4.6% rise in Sydney values over the quarter. Brisbane was the third best performer, with values up by 1.9%, while Darwin values moved 0.4% higher over the quarter. The largest decline was in Hobart, where dwelling values fell by 2%, and in Adelaide, where values fell by 1.6%. Values were also down in Perth by 0.7% and Canberra by 0.4%. The number of auctions held over the first month of spring was almost a third higher than it was at the same time last year, with 10,351 auctions held. Clearance rates have slipped on the higher auction numbers, with the major auction markets of Melbourne and Sydney recording clearance rates around the 70% range. In fact, Melbourne has started to show a higher clearance rate than Sydney over recent weeks. Listing numbers are also starting to rise, which is a normal trend during spring. The influx of new properties into the marketplace is highest in Sydney, where newly advertised properties are 16% higher than at the same time last year. All cities are seeing new listing numbers higher than a year ago, except for the softer markets of Perth, Darwin and Hobart, where vendor confidence isn't quite as strong. The listing numbers are providing more choice for buyers and reducing some of the urgency we've been seeing in the housing market performance in the lead up to spring. With the final quarter of the year ahead of us, it will be interesting to monitor housing market activity. With more focus from lending regulators to reduce the pace of investment, we've already seen signs that investor demand is slowing. At the same time, owner-occupier lending has shown a slight pickup, which may set the scene for a more balanced mix of housing market activity over the remainder of the year.